Hey there, Dan Geltrude here, and I'm coming to you live with something that's blowing minds across the financial world, because today's episode is going to supercharge your token collection. We've talked about regulations, we've explored real-world impact of tokenization, but today we're getting our hands dirty with something you could actually touch, feel, and see. Tangible asset tokenization. You might wonder why we need to tokenize valuable physical assets. Consider this scenario. You're interested in investing in farmland. Can you easily purchase and manage agricultural property today? Tokenization changes this dynamic, taking physical assets, splitting them into affordable digital tokens, and letting investors like us into markets that were locked behind velvet ropes for centuries. So to help us unlock the full potential of tangible asset tokenization, we've brought together two game changers who are rewriting the rules of ownership as we speak. First up, we have Anand Narayanan, founder of AltDRX, a fintech startup transforming real estate investments with over 23 years of experience in real estate and banking across India, the Middle East, and the United States. He has pioneered a blockchain-powered platform enabling fractional ownership of properties, making real estate accessible and liquid for everyone. Completing our panel is Shawn, Shetty, a forward-thinking investor at Outlier Ventures. Following a successful exit from PropTech Venture, Shawn now funds the intersection of AI and real-world assets with investments in multiple innovative blockchain projects. So, let's get started. We'll go to Shawn first. So Shawn, beyond real estate, which tangible assets, for example, luxury goods, infrastructure projects, show the most immediate potential for tokenization, and what investor demographics are driving demand?
So Dan, that's a great question. Right now, infrastructure and commodities are where we're seeing the most traction. When we're talking about infrastructure, we're talking about toll roads, solar farms, and even smart cities. Traditionally, these investments have been locked up in institutional portfolios because they require massive investment and long-term commitment. Now, tokenization flips this model. This allows everyday investors to participate in these revenue-generating assets that used to be completely off limits. Commodities is a no-brainer. Another sector that's seeing strong demand. We're talking about gold, rare minerals, tokenized carbon credits, even agricultural assets, as you mentioned, are now available in fractionalized forms. And let's be real, if we can tokenize gold, it was only a matter of time before someone figured out how to tokenize a cow. Yes, that's a real thing. To your second point, if we're talking about demand is coming from mainly two key groups. We have institutional investors on one side who are looking for new diversification strategies. And then we have retail investors who have never had this level of access to such hard assets before.
Anand, you've guided major firms through the tokenization maze. Gold and real estate each have centuries of unique laws surrounding them. When helping someone tokenize these types of assets, what are the major legal differences that they should consider from the start?
Thank you for having me over, Dan. And that's a great question. Well, more than gold, in fact, real estate has some very unique nuances, isn't it? In fact, the nuances differ from one country to another, even from one city to another. But the beauty of tokenization and asset-backed token is that the token actually draws the economic value or the financial value of an underlying asset without actually changing the legal construct or the legal title structure of the asset itself. That's the beauty of asset-backed tokens. At AllDRX, for example, KYC whitelisted users can come and buy and sell tokenized residential properties 1 square foot at a time. So what does that mean? Do they actually own the title to 1 square foot? No, they don't. But what they actually own is the economic or the financial value of 1 square foot.
What if you could own a piece of a skyscraper for a relatively small sum? That's the power of tangible asset tokenization. But what are tangible assets? These assets are physical things with real value, like buildings, farmland, gold, or art. Tokenization converts ownership of these assets into digital tokens on a blockchain, making them accessible to everyone. This revolution allows even small investors to access markets previously reserved for the wealthy, while bringing liquidity to traditionally illiquid assets. Token Money Magnet helps you understand everything about tokenization and how to get started.
So Anand, I want to follow up with another question here. We are seeing regulatory frameworks evolve at different speeds globally, from Dubai's proactive approach to uncertainty in many major markets, with tangible assets like real estate and commodities on the line. Is it better for the tokenization industry to innovate now and deal with the regulatory challenges later, or wait for clear rules before scaling up?
Well, Dan, not just Dubai. Most regulators around the world have learned now to deal or separate, in fact, crypto from asset-backed tokens. For example, in India, IFSCA, which is India's Unified Financial Services Regulator in GIFT City, has come up with an asset tokenization consultation paper, which is fantastic, isn't it? Similarly, let's say Qatar, another country in the Middle East, the Qatar Financial Center has come up with digital assets program. Both these countries, mind you, Dan, are not very crypto friendly, but then they're embracing asset-backed tokens. So in fledgling regulatory environments like this, the way to deal with it, with the challenges, is to deal with it responsibly, but to deal with both going to market and dealing with regulators simultaneously. I don't think one can precede the other.
Thank you. That's great insight. So Shawn, over to you. Does real-world asset tokenization follow a similar pattern to physical asset development, where ownership is first established, for example, owning land, improvements are made, for example, constructing a building, and then market value increases? If so, how does this process translate to digital tokens?
Absolutely, Dan. The structure is very similar to what you just mentioned, but it has more of a digital first approach. Now, since I have a background in commercial real estate, I might be drawing a lot more relevance to it. So the first step is usually asset selection, and then you structure it. You have to establish some clear ownership. You got to ensure there's legal compliance, and we need to set up the right entity framework that allows for tokenization. Now, then there's the step of value creation, which could mean improving the physical asset itself. It may be renovations, a better management of the financial instrument. Then we turn it into a income generating investment. till here, everything was the same as what it used to be in the traditional finance space. But the key difference here is traditional real estate investors have to wait years to see their gains. Whereas tokenized investors, they just need, I'd say, Wi-Fi and a good secondary market.
Okay, so Anand, over to you. Tokenized REITs are starting to pop up, promising a new way to invest in real estate. But how do we tackle the challenge of valuing these tokenized properties accurately, especially when the traditional real estate market itself can be unpredictable?
It's a great question again, Dan. So in my opinion, tokenization has to solve something substantial, right? And it can't be just a superficial, marginal utilization value. To me, in what you just said, let's say, for example, tokenizing a REIT listed in India and offering it to Indians makes no sense. Why would you want to deploy tokenization on an Indian REIT when the Indian customer can anyway directly go and buy an Indian REIT for $100? So this makes no sense. However, if tokenization can be deployed to, let's say, tokenize Indian REITs and offer it to, say, Malaysians, or let's say take a REIT listed in Malaysia, tokenize them and offer it to Indians, that solves product market fit, right? That is a case where tokenization allows an Indian without the need to have a broker-dealer account in Malaysia to be able to participate in REITs.
Excellent. So, Shawn, we are seeing tokenization projects with AI integrations across multiple physical asset classes, from predictive maintenance for tokenized equipment to valuation models for real estate. What specific AI application do you think will create the biggest breakthrough for tangible asset tokenization, let's say, in the next 18 months?
I mean, I think AI-powered risk assessment and valuation modeling will be the biggest breakthroughs. This is something I've seen firsthand. Before I moved into Web3, into the investing space, I built and exited a prop tech company that was focused on AI-driven risk assessment, specifically for the commercial real estate sector. I think the demand for AI insights in these RWA assets is massive, because traditional valuation models not only lack accuracy, but also require significant lead time to process data. If you're talking about institutional investors, lenders, asset managers, they need faster, far more reliable ways to assess property value, and not just property value, but the associated risk factors. AI completely changes the game there. AI is able to analyze vast data sets, historical price trends, environmental risks, tenancy stability, and even micro and macroeconomic indicators. That's where I think AI is heading. And if we're able to combine these AI-powered insights with the transparency that blockchain is able to provide, we think we'll be able to unlock unprecedented efficiency gains and a lot of trust in the tokenized asset economy.
Okay, next we are going to go to some questions from our audience. So we're going to start with Shawn. Shawn, blockchain technology allows ownership of assets to be digitally recorded using smart contracts. But how are these transactions legally validated, and what ensures that they comply with existing laws and regulations?
I feel like this question has come from a lawyer or like a compliance guy, but it comes down to legal structuring and compliance. has to be integrated on the smart contract level. If we're talking about platforms like Securitize and Polymath, they don't just tokenize assets. Tokenizing assets is like the easy part, but they are able to bake KYC and AML and legal governance at this smart contract level. What this means is every transfer is pre-screened for compliance. I mean, smart contracts are great for automation, but if we have to be honest, without legal oversight, they're just expensive vending machines for digital assets. That's why proper structuring is very critical here.
Yeah, that's actually pretty interesting. So the next question from our audience is to Anand. So in traditional systems, courts or arbitration bodies handle disputes over contracts. If disagreements arise over smart contracts or blockchain ledger transactions, who ensures fair resolution in a decentralized system without intermediaries?
Well, I mean, I think the world is learning to deal with native digital assets on blockchain and traditional tangible assets being tokenized. And the blockchain use case, Dan, is very different for crypto as against, let's say, tangible assets, isn't it? So the market participants, the regulatory requirements are all very, very unique to asset-backed tokenization. So like I said in the earlier part of the conversation, an asset-backed token draws economic value of an underlying asset without actually in any way changing the core asset's legal structure itself. So what that means is once an asset-backed token is generated, which is just the financial value of the underlying asset, and that is getting traded, what really needs to get protected is the ownership of the token. Does the bearer really have enforceable legal ownership rights on the token? That becomes the most relevant point. Most digital assets are not legally enforceable in most countries. However, the way we are solving it in India is to ensure, let's say, for example, 100 property-backed tokens are being brokered on our platform on a daily basis. Then the settlement file is becoming a legally enforceable document. Government-denominated stamp duty charges are being paid to ensure that the transfer of the token is itself a legally enforceable transfer.
All right, it's time for my favorite segment, which is the rapid fire round. So we're going to start with Anand here. So tokenization platform or dating app, which is harder to get people to trust?
Dating app, in fact, it's easier to trust an asset rather than dating a stranger, isn't it, Dan?
Yeah, I think I might agree with that one. Next, your tokenization superpower is the ability to instantly tokenize everything you touch. So is that a blessing or a curse?
I think it's one of the greatest blessings to be able to power, let's say in India, middle India, to be able to participate in residential assets 1 square foot at a time. So anybody can get up and buy 1 square foot of Bombay or 1 square foot of Delhi. I mean, that's a blessing, isn't it? Everybody can participate in tokenized residential assets. It's a blessing, Dan.
All right, the next rapid fire question. The most overrated tangible asset being tokenized right now?
Well, that's tricky. I should say passenger vehicles, tokenizing a Range Rover or a Lamborghini or a Ferrari. I think that's possibly overrated because it's a depreciating asset. I'd rather tokenize a commercial vehicle over a passenger vehicle. So I would say tokenizing passenger vehicles is overrated.
Okay, and then your last rapid fire question is, if you could gift anyone a tokenized asset, who would it be?
Well, everybody who has a wedding this year and everybody who has a birthday, I think should get gifted a tokenized digital square foot instead of, say, gold. So how awesome that would be. Everybody who's getting married gets a digital square foot. You're getting married in Bombay, get 1 square foot of Bombay. So I think that'll be awesome, isn't it?
I like that one. All right, so now over to you, Shawn, rapid fire. between gold, rare whiskey, or a vintage car collection, which one would you tokenize first?
Between those choices, I'd go with rare whiskey. It's got a strong
Rare
collector's
whiskey?
market, steady price appreciation, and more importantly, it's far more easier to fractionalize than, say, a Ferrari. Plus, the aging process adds more intrinsic value over time, which aligns well with the timeline that's going to take for tokenization to really blow up.
All right, so the next question here in rapid fire, Shawn, if your tokenization platform was a fast food chain, which one would it be?
If it was a fast food chain, I'd choose Shake Shack. It's got premium quality, a strong community, and a lot of growing demand. So tokenization isn't about the tech. It's about building a loyal investor base. And just like Shake Shack has built a cult following.
Okay. So the next question here is, and this is something where you would finish the statement here. The first tangible asset I ever wanted to own was go.
A piece of land.
Any specific piece?
Yes, definitely in Mumbai. It's a concrete jungle. There's very little land available. So land ownership has always been a mark of stability and long-term value. Also, no one can hack it, so that's a plus.
Okay. And then our final rapid fire question is, your biggest tokenization success gets made into a movie. Which actor plays you?
I'd go with Dev Patel. He's got the range and can probably make tokenization look way more exciting than it sounds. Plus, I feel like he'd actually research what a blockchain is before taking the role.
What daily item desperately needs to be tokenized, but nobody's talking about it?
Well, I think possibly daily memories, I think they occur only once, and once you tokenize them, and you can reminiscence on them later on, and memories are possibly the most valuable, isn't it? I think anything that's valuable can be tokenized. So yeah, daily memories.
Okay. Shawn, over to you. Tokenization as an emoji, what would it be?
Tokenization as an emoji, it would be a diamond. A lot of people haven't really realized the value that tokenization has. It's going to unlock unprecedented value. We're talking about assets that were very illiquid, and we're going to be making them extremely liquid. And this is going to give rise to a lot of a new liquid asset class.
Okay. So Anand, over to you. If you could tokenize a famous historical artifact and own a piece, which would you choose?
I would say the Taj Mahal. I think it's there's only one, and it's iconic. And who wouldn't want to have a small little piece of that little beauty?
Okay. And Shawn, what's the weirdest tangible asset someone has asked you to tokenize?
Okay. The weirdest asset is that somebody asked me to tokenize is all the gold that is currently under the ground. They essentially wanted to tokenize everything that's currently under the ground. And apparently they don't need a custodian because Earth is the custodian. And they also wanted to raise investment for this venture.
Okay. And there you have it. We've just explored how tangible assets are being tokenized. Tokenization isn't coming, it's here. So thank you to our two fabulous guests for sharing their knowledge with us today. I'm Dan Geltrude, and this is Token Money Magnet. So keep exploring, keep innovating, and most importantly, keep stacking those tokens. We'll see you in the next episode.